Hello everyone, welcome back to my channel. In the last video I have explained you what are the concepts of accounting. In that we have learned these many types of concepts are there in the accounting. We have not learned what briefly an accounting concept means. Today the video will be long and it will contain all these concepts. So first, moving on to the concept. Here I'm gonna highlight it. Business entity concept. What do you mean by a business entity concept? Okay, in the business entity concept, a business is treated different from a person who manages it, or a proprietor, we can say. A business is different and a proprietor is different. Okay, both are different entities. Business is a different entities and proprietor is a different entity. We have heard that in the business law we have heard that business is a separate legal entity which has its own perpetual existence. It is different from the proprietor. Okay, hope you have understood. Business and proprietor both are different. Okay, business is a separate entity. Then these concepts help us to obtain the financial position of the business. So it helps to assume the financial position of the business. Once again I will explain you. This concept help us to understand that both business and the proprietor are different from each other. Okay, and it also help us to assume the financial position of the business. Next, coming on to the second one, it is money measurement concept. Okay, money measurement concept. What do you mean by money measurement concept? Here, money measurement concept is nothing but all the transactions which has occurred are in terms of money. Here we are recording all the transactions in the various account in the terms of money. Okay, all the transactions are expressed or interpreted in the terms of money. The main aim of the business only is to earn money, and the main aim of accounting is to record the financial transaction of money. Okay, this concept deals with money which is obtained by the business. Without money, no financial transaction. Okay, the next one is going concern concept. In the going concern concept, the business continue to go on. Whatever might happen to a proprietor, a business will never come to an end until and unless it will dissolve or it will come to an end by its own. Until that time, the business will go on continue. So, it is a going concern concept. It has continuity of life. Okay, it has continuity of life or the future of the business enterprise. Okay, it has been stated above that business entity has continuity of life. In some degree of continuity of every entity, no one can accurately predict the future. The future of the business, we cannot predict it. Sometime it may be good or sometime it may be bad. Sometime it may get profit or sometime it may earn losses. So we cannot tell the future, but until and unless the business come to an end by its own, it will continue to go on. If anything happens to the proprietor, the business doesn't come to an end. The proprietor will change. Okay, until and unless in the sole proprietor, the business and the person is same. Okay, in the sole proprietorship, business and person are the same. We will not consider this in the company's act of business. So going concern concept means nothing but continuity of life of the business. It goes on continue. Okay, next, what we have next? Cost concept. What do you mean by a cost concept? According to this concept, all the assets are recorded in the books of account at its cost price. Okay, we will record a cost. Okay, I'll give an example for you. I am purchasing this pen for 10 rupees. So I will record this in the books of account as 10 rupees in the books of account. Okay, so I will record this in the books of account as 10 rupees. So the cost concept says that in the books of account we will record the asset at its cost price. Okay, after 1 year the price of this asset will be decreasing gradually. Okay, at that time we will calculate the depreciation on the cost price. So I hope you have understood. Okay, next is accounting period concept. Okay, an accounting period concept means a business will goes on continue until and unless the accounting period begin and end. Usually accounting period consists of 365 days or 52 weeks. Both are equal. Okay, here we will consider as 1st April to 31st March. Okay, accounting period. Okay, this is our accounting year. We will consider this 1st April to 31st March. Okay, also sometimes we will record our books of account in half yearly or quarterly. Half yearly means after 6 months of starting the business or after 4 months. Depends on the business. Okay, hope you have understood. Accounting period is nothing but a business will goes on continue until and unless the usual period. Okay, in the business we can make the half yearly accounts or quarterly accounts or the annual accounts. It depends on us. Okay, next, what we have next? Dual aspect concept. In the dual aspect concept, we have understood that each and every transaction has dual effect. Okay, dual effect in the sense, if we buy something we need to pay money, and in that instead we will get the amount. For example, for buying this pen I need to pay 5 rupees. Okay, then only I'll get this pen. So we will record this in the book of accounting. So like that, how we will record? I have purchased a pen, so I will write purchases account data to cash. Means I have purchased this pen, instead I have gave cash to them. So I am showing double effect. Okay, twofold effect I am showing here. Double effect we are showing. So it is called as dual aspect concept, or it is also called as double entry system of accounting. Okay, next we have matching concept. What does it means? This concept recognizes that determination of profit or loss on particular accounting period is a problem of matching the expired cost allocated to an activity period. In other words, the expenses which are actually incurred during a specific activity period in order to earn the revenue for the said period must be matched against the revenue. It means that whatever expenses we are incurred, it should be in order to earn revenue. For example, I have given the salaries to my employees in order to gain the, what we will say, in order to gain the results. Okay, so I need to pay the amount, the expenses which are paid to specific activity. Whatever we are paying for earning the revenue, we will match that against the revenue. So the matching concept says that we will get profit or loss, we should record it or match it to the expired cost. Okay, next is realization concept. What does realization concept means? According to this concept, revenue is considered as earned on the date when it is realized. Revenue earned by sale of goods or services should only be taken into income statement. Okay, what this concept is saying that whatever revenue we are earning, it is on the date which is realized. Whenever we are earning the revenue, on that date only we are realizing the revenue. Okay, not on the other dates. For example, revenue, we are earning the revenue on the sale of good or rendering some services. Suppose I am selling this pen. I am earning some revenue. That only I need to consider in the realization concept. Or I am rendering some services to, suppose a doctor is rendering service to a patient. So he is earning some revenue. That revenue only we need to take under realization concept, not the other revenues. Okay, income statement in the sense P&L account. When we are making P&L account, only revenue earned should be taken. Unearned revenue should be ignored. Okay, unearned revenue should be ignored. So this concept says that revenue earned by sale of goods or rendering services should only be taken. Okay, next is accrual concept. What this concept says, according to this concept, revenue is recognized on its realization, not on its actual receipt. Okay, whenever the cost is incurred, whenever the costs are recognized, for example, we have paid the electricity charges of an office. For example, we have incurred, we have got the bill, but we have not paid it. Okay, the concept says that revenue or cost is recognized whenever it is incurred, when not paid or received. Suppose I am working for a month and I am supposed to get an income of 10,000, but I have not get. Which I have not get comes under accrual. I have not got that. So whatever income or revenue or cost have not received yet or have not paid yet comes under accrual concept. Okay, here we end with our concepts. Okay, hope you have understand all these concepts. We will see next topic in the next video. Till then, take care. Bye.